as far as the purchase price or
Well, if you're
mortgage
borrowing
payment?
765,000 from the bank at the current rate, not taking into account taxes or insurance or anything like that,
Mhm.
how much, because it's a jumbo loan rate, you're going to give that higher amount. How much is a customer expecting? Because that might give a perspective as to why it might be more, because the bank would look at it like, if this guy doesn't pay in 10 months, look at what we are risking versus something that's maybe at a two or three hundred thousand
Yeah,
dollar.
in New Jersey, you're probably looking at, a 4,500 to $5,000 a month payment, and one of the big reasons I think of that is Fannie Mae and Freddie Mac will back mortgages up to the jumbo limit, right? That's why it's a jumbo, because it's not being backed by Fannie Mae or Freddie Mac. So right now, to be honest with you, mortgages are a rough investment because, the unemployment rate has skyrocketed, and
We're dealing with the unknown.
correct. A lot of people, if you're not working, how are you going to pay your mortgage? So therefore, why would an investor want to invest in mortgage-backed securities? So therefore, no one really wants to buy them, and the government's the only backer. So the government's backing up to 765, and other than that, it's basically like the private market doesn't want to touch it, because of the unknown and the unemployment rate being what, 20-25% of our country
Is
right
that
now.
is that where we're at right now?
That's what experts guess at, but yeah,
And
it,
that would be the highest ever in historically, no?
in a long time. Yeah, in a long time. Yeah.
Yeah.
So that, and the stimulus package, which gives people 3 to 6 month furlough where they don't need to pay their mortgage, really hurt the mortgage market a lot. That hurt our rates tremendously because now why would an investor want to invest in something where the person supposed to pay it doesn't have to, as per the government, for 3 to 6 months? I mean, that, what kind of investors are you going to want jumping in that market where, hey, where,
And
you buy this, but you're not going to be paid for 3 to 6 months? It's not too attractive to a mortgage investor,
and
you
I
know?
think you bring in a bigger business conversation to what we're talking about right now. As a real estate agent, it's not your job to know everything that Shane knows, nor is it to even guide them which way may be the right way. Um, and yet, uh, there's just, you should have some knowledge as to how the business works
Yeah.
and what factors change the number, change the way how which way the sales is blowing. But
Yeah.
and I mean that because a lot of, and that's the difference between an agent who gains clients for life and can be a resource to their database and to their community, because when somebody does ask them a question about what's going on in the market, they have a bit of what you're sharing today,
Yeah.
and share that in an educated fashion to attract people into their database. So if some people go, oh, that's not my issue, I don't have jumbo loans, but you should kind of understand how it's working. And something you're talking about right now is investors, meaning people that buy the loans,
Yeah. Yeah. So
right?
back
That's
end.
the back end of
Yeah,
the business.
buyers of mortgage-backed securities, which is how we price mortgage rates. That's how mortgage rates are derived. So if there's a demand for people to back mortgages, then great, then our rates are attractive. If there's not, then we see rates go up, right? Just like anything else. If somebody wants to buy houses in Pequannock, New Jersey, great, then it's going to be more valuable. If not, if something happens in town and now people don't want to buy there or they don't feel safe, then values are going to drop.
That's right. Or actually, Pat was speaking about a flood that had happened years ago that affected a certain area up in
Yeah.
our area, but it didn't affect other towns. So, all these different indicators that will affect pricing and value.
Yeah, and
Matt?
it's interesting. You think of it very simply, is just like that. Is it really safe for people to invest or companies to invest in mortgages right now? It's kind of like a gauntlet, right? So who's going to lose their job next? How long are they going to be unemployed for? So it's very tough to just say you don't have to pay your mortgage for 3 months. There's a lot of people that get hurt and companies that get hurt behind that.
To
And they,
that
and they
point,
will
before Matt,
adjust their purchasing power accordingly, in the
yeah,
future.
before Matt addresses a point, I know he has something to say. Is I heard somebody say some astronomical amount of how many mortgages were not paid in April, like
Mm.
something like, I don't even know, like 2 million or some
Uh,
astronomical number
Mm.
of borrowers that, I would assume not every single one of them got the right advice as to whether or not that was the smartest move for them. So if you are in that situation, or if you haven't checked in with your people, I would absolutely just make sure nobody has done that without the right information as to whether or not that was a smart move. Not that money will not be forgiven, and in most cases, it's going to be due in the next 3 months. It's not going to be spread over any other amount. So please check with Shane or your local lender for that.
Yeah, and
Um,
it's interesting. We had a conference call this morning, and there were other mortgage reps who were saying, "Hey, I talked to a customer. They were considering refinancing, and their finances are totally fine, but they heard that they're allowed to get a 3-month furlough on their mortgage, and they just took it." And I said to them, and the other reps were telling the people, like, do you understand? Like, you're going to have to pay that back. Like, nothing's coming for free, and we still don't know the repercussions, like what's going to show up on your credit report from that.
right.
So even if it's not going to show up as normal, right? There's probably going to be late
Something.
payment but forgiven or some. There's probably going to be some type of notation, and maybe it won't affect your credit score, but underwriters of mortgages, car loans, student loans, they're human. And when they see that, oh, wait, that's a sign of weakness, right? Even though it didn't affect my credit score, it's good. Like consumer credit counseling, that's been like a debate over the last 10 years. First of all, it was bad. Then it was okay. Then mortgage companies were considering it a detriment to someone that applied. So how is this going to be looked at? So I would not take that furlough with your mortgage unless you absolutely need it, because you don't know the negative effects that's going to have down the road, and how the lending industry and just in general in getting any type of loan is going to look at that down the road, So if you
That's
need
it.
it, hey, if you need it, take it. But a lot of these lenders are saying you have a 3-month break, and at the end of those 3 months, we want our 3 months mortgage payment back. So it's really not
Yeah.
that much of a of a break.
Well, and to our point of our Matt and I's conversation today at 11 o'clock about your big why, if you know what your motivation is, if you know what your end game is,
Mhm.
you may be making different decisions. You don't want to if you have something that you're planning in the next year, you're obviously going to need last year and this year's choices are going to show up
Yeah.
in whether or not you're qualified next year. So that's the other point, is make sure you're talking to your accountant and your favorite mortgage resource, so that you're making the right decisions
Yeah.
and not just making a very now decision financially, not thinking about what 3, 6, 12, 24 months looks like.
Yeah.
So Matt, I know you've been out trying to say something.
No, I was just two things. One, Ray said thank you for sharing all the information. He said thank you for that. Number two, I was just going to jump in and say I know that I've seen you advertised other market centers. You're on, just like us, Zoom calls, Facebook Lives, pretty much all week long. So
And
I
thank
really
you for
depend
that,
on
because not everybody's doing that. So thank
not
you.
Yeah.
everyone's doing that. So that's huge. And I guess what I wanted to ask you is, are there any things or perspectives or questions that have come up on some of those calls that you think would be valuable to share with our agents? That, obviously Mary Beth and I are asking some questions for you, but maybe there's something that came up in another call that you were on that you think would be very beneficial for our agents to hear as well.
Getting questions about renovation loans and construction loans, and unfortunately, they've been suspended, at least at our company and a lot of companies over the last few weeks. We used to do them and do them a lot 6-7 weeks ago, but now that's not the case. We are seeing people inquire that live in the city. We're seeing them inquire about moving out. It's almost like after 9/11, for those of us that were in the industry. I remember seeing, just talking to a lot of people just that, that didn't want to be in the city anymore, so the suburbs really kind of grew from that. And that's what I've been seeing. And a lot of the loan officers on our call in our area, that they were seeing people just moving out of that kind of walkable type environment and getting more into the suburbs, which we've seen the exact opposite, right? Over the last few years, so a lot of agents and lenders within our company had seen that, mortgage reps. But FHA pricing has changed drastically as well for those higher end individuals. Like a gentleman asked me on a Zoom meeting, he said, I had a customer who was getting quoted 3.25 4 weeks ago on an FHA loan, and it's a higher end loan. It's like a $700,000 loan. And now he's getting quoted like 4% or higher. And I said, yeah, that's very valid. Like, absolutely. The demand for the more risky loan, right? Somebody putting 5% down on a $700,000 home, that the demand isn't really there for that type of loan. But I can tell you that, just this weekend I left a kind of a refinance analysis kind of video on the page, the prosperity page, and just telling people like, hey, there are people saving money by refinancing, whether they're going from a 25 to a 20, or whether they're 26 years and they were going back to a 30-year but cutting $350 a month off their monthly payment. So really tremendous savings from that for people that are employed. You can have a decrease in your income, right? A lot of employers have decrease and cut pay from 100% pay to maybe 80% or 70%. And okay, we get confirmation of that, and we use that income to qualify. So the people that are working can really benefit by where the mortgage industry is right now. Michael Brand was saying that I think mortgage and house were like the two top search words on most search engines now, right? Because people are home. So they're either looking to refinance their mortgage, or if they're anywhere near buying a new home, in the next 3 to 12 months, that they will probably, start searching now, right? And do a little virtual research now. So yeah, and I've been hearing from a lot of past clients about either one, about buying here or refinancing. So, yeah.
Now, have you noticed on our call on Tuesday, we were talking about some stats that we're seeing or trends, and we saw that we pulled that under contracts were up, I believe, what was it, 23 or 24%. And I think for sales were down, or listings were down maybe about the same, like 20% or 18% or something like that. Are you noticing?
Well, that was for March. We were saying that for March, under contracts shot up, and in some markets, actually in Wayne, it was a 58% increase from last year's March. Okay. And I believe that things just got like, okay, you're buying, let's get you in contract right now.
Yeah.
That's what I feel happened in March. So maybe we captured some of the April under contracts. We'll see what's happening in April, because the inventory did not come on. The inventory was starting to decline in March, and is still declining as far as, compared to last month. And every day we have less and less inventory coming on. So it's going to be interesting to see what April brings. But I just want to be specific that was March that we saw the increase in under contracts.
Okay. Yeah, I mean,
and that was all MLS, all GSMLS. So that's a lot of the markets that you do work in, but not including Hudson or NJMLS.
New Jersey.
Yeah, I would guess that my purchase leads or people that I'm talking to has probably dropped by probably 50% over the last 6 weeks. But we're still talking to people and still, probably taking 2 to 3 purchase applications per week, which certainly if it was a normal spring, I would want much more than that. But it's still very good based under the circumstances. It's phenomenal, I think, Well,
and I think it's also giving you a time, because I mean, we're all really busy leaders, and so we don't get to, I mean, even my own agents don't get to spend the FaceTime that I'm getting every day with them. Mm-hmm. And now you're able to, get your message out on a platform where everybody can kind of hear it, and you're, and in a way, it's allowing us to connect even more with our agents, our database, so that when it does open up, we're in first mover position.
Yeah.
Which is ultimate goal. So I think, and you're just exemplifying what I believe our agents should be doing, educating consumers, so that when it opens up, you got them, you have the mind share, and servicing what you can, who's super motivated right now.
Yeah.
Because there still are people that need to buy and sell. And to your conversation about the rates, some buyers that they have more time, they're both home, so they could decide on what they want to do, make decisions together, and the rates are what we know right now, and we know they're under 4. Who's to know if they're going to pop over 4 when we get out of this? So they might just be getting the benefit and there's less competition.
Yeah. And my CFO, he still believes, and our guys in our pricing department, they believe that we could, if people can, get back to work, we could see mortgage rates decrease. If
Sure.
at a measured pace, we still could see rates come down a little, but you just can't count on that based on the underlying factors that we've seen. But still,
Yeah.
hey, 3.25, 3.5, just ridiculous levels. We're thrilled with where we are.
Yeah. And we can't count on the prices to sit here and speculate as to what's going to happen. Each market is so specific right now because of how the virus has affected different counties and different areas. And, to Gary Keller's point is, of course, the prices are going to go down. I mean, overall, nationally, it just would make sense that with what's happening with the job market, that prices would just go down. It just might knock more people out. Maybe rentals go up, but it just goes down. Bill was saying he's thinking maybe it's going to go down. And then when we look at specific markets, we say, well, we could see a supply and demand issue here. And yet we also could see no supply and demand issue. And so I think this is a great time together just to stay weekly where we're learning
Let me
what's
just
going
bring
on
up
in
one
your
more.
industry.
Let me just bring up one more factor too.
Yeah.
I understand that people. I mean, I've talked to a lot of people who are not doing anything now, but they say, "Hey, we're all cooped up in this house. We need a bigger house. I need you to run numbers. I'm not looking now, but I need you to run numbers." Maybe it's a past client or somebody that was thinking about buying and they shelved it.
Yep.
Now they're all in the same house and they're like, "We need something bigger." So as soon as I get back to work, or as soon as we feel comfortable getting out there, I don't know. I don't know about our area, how much we're going to decline. I kind of feel
I
like the
know.
lack of inventory.
I know.
I understand what Gary's saying
Mhm.
nationally, but in
Nationally, right.
our area where we can't just build more units. We're at capacity pretty much in North Jersey. So I kind of think that there's going to be just people that are waiting. Do we feel safe? Let's go get them, and it's just going to be a matter of, is there enough inventory to supply that? I kind of think we might
Yeah.
see, and especially if we can be back to work and opened, and the shutdowns kind of opened up by like July, if we can give enough time
Yeah.
for people to look and buy and close before school starts, right?
Yeah.
If we can get
They might.
there, like we could see a really strong market, but
Yeah.
that's what I've seen. And I'm talking to the guy, I'm talking to someone, and like the kids are yelling in the background, we need a bigger house, and you can just feel their pain,
Well, you made me think of something. Anybody who put a newlywed couple in a house a few years ago, that they're probably the key to be checking in, because they never plan to have maybe 2 kids by the time it's 3-4 years
Yes.
later. And now is really where they've lost their own individual space. They're not even sure how they would have fit. So that is absolutely one thing. Second thing that you just made me think of is in my specific town, which is Perth Amboy, New Jersey, Middlesex County. What is still happening is the township is still working. And so all these amenities are getting built in our area. Like we have contractors out here working on a big park that they're building, and some of the streets are getting repaired, and they were hacking away at the parking lot across the street the other day. So what I'm looking at is it's getting cleaned up and things are happening that when this all comes back, like in my specific area, I'll have a couple more amenities to be selling for Amboy, New Jersey.
Yeah.
So,
Yeah. Yeah. I guess those guys are still working, which is positive. Yeah.
yeah, they are.
Shane, do you have any final thoughts before we wrap up for today?
I guess I would just say, like Mary Beth said, that's probably the one thing to take away from this. If you, before you come back and start looking at homes, and if maybe someone was pre-qualified in February, March, and they haven't talked to their lender or haven't talked to us before you go back out, or before you start showing homes, like don't just assume the pre-approval. I think that the smart thing to say is, hey, you know what? you should probably go back, talk to Shane. Like, let's take inventory. The mortgage market has changed tremendously. I know a lot of programs don't exist anymore, and some are at better rates, some are at worse rates. Like, let's just make sure you're comfortable with your monthly payment, especially if it's in a jumbo market, right? If they're looking in Franklin Lakes and it's a $1.1 million purchase and they're putting 20% down, like, absolutely make sure they run the numbers, because that payment could have gone up by a couple $100 just in the last 6 weeks. So yeah, that's probably when we do open back up. I wouldn't just, run and jump and get out and show homes. But let's come back to the lender, have them even just run a monthly payment. Hey, here's what it is now. Oh, now you can't put 5% down. You got to put 10% down. Are you okay with that? That this is your cash out of pocket. That's
This is
probably
what I need to see in the bank.
correct, because the mortgage market has changed tremendously in the past 6 weeks. Don't expect it to be the same,
Ray just said, well, first of all, he's trying to bite on my town. He said Perth Amboy is his hometown. He said, it's mine now. But he said, thanks, Shane, already letting my clients know the awesome info shared here today. So with that being said, we
Good.
value you. Thank you so much. And we'll be back here next week.
All right. Thank you,
Absolutely.
guys.
Have
Have
a
a
great
good weekend.
weekend.
All right.
Be safe. Enjoy the family.
All right. Take care.
Bye.